Good day, ladies and gentlemen. In this particular video, I'm going to teach you a trading strategy that you can just go ahead and backtest so you can get to see the effectiveness of the trading system. Okay, so this strategy is quite simple, so it's good for beginner traders. It's also good for intermediate and advanced traders. Okay, but definitely if you're an advanced trader, you can tweak it and add whatever confluence you would like to add to sharpen the strategy even more. Okay, like I always tell you, no strategy is set in stone. Based on your backtesting and the information you get from your backtesting, you can see what really works and what does not, what you need to tweak in order to sharpen or increase the accuracy of the strategy or trading system. Okay, so basically this strategy is built around the fair value gap, but not any kind of fair value gap. You need to see some things before you start considering the fair value gap. You would notice that in some areas of the chart, fair value gap seem to work, while in some other areas the fair value gap does not work. Okay, so part of the reason is you looking at a fair value gap that is a trap. All right, there are some things that's supposed to happen for a fair value gap to be high probability. All right, so one of those things is there should be a liquidity needs to be taken out. Liquidity needs to be taken out. Then price will move in the opposite direction. Fair value gaps that form after liquidity has been taken out are high probability fair value gaps. So you need to see some kind of liquidity being swept. All right, then price should reverse to the opposite direction, and fair value gaps created at that point are high probability fair value gaps. Okay, so those kind of fair value gaps have a higher potential of giving you profits compared to you just picking fair value gaps randomly, just because you know that fair value gap is a three candle pattern. The space in between is what we know as FVG. That knowledge is not enough. You need to combine it with liquidity based concept. That's what gives it better accuracy. Okay, so basically I'll just give you some random examples. Right here you can see the price is moving in the upward direction. Okay, giving us what? Higher highs and higher lows. So higher highs, higher lows. At this level, something happened at this level. Let me get this trend line stuff. You can see that the liquidity above this high was taken out. Okay, liquidity resting above this high was taken out. Then price aggressively moved in the opposite direction. The fair value gaps presented as price is moving down are high probability fair value gaps. But one mistake, or let me not call it a mistake, because there's a trading system that also supports that idea, and that trading system has to do with waiting for price at this very first fair value gap, waiting for price at this first fair value gap. But in my experience, I've found out that if the change in direction or change in trend is very strong, price will not come back to this first fair value gap that formed here. Okay, price will just retrace to a fair value gap that is close to it, take internal liquidity from there, then start pushing for external liquidity. It will just keep going down while your pending orders are waiting at this high level. Okay, this very first fair value gap. All right, what did they call it? You are waiting for price to come to a premium before you can sell from that first fair value gap. Okay, so what I would ask you to do instead, if you want to use this system, is just if a new fair value gap is formed, that new fair value gap becomes your priority fair value gap. You just quickly put your orders there. Okay, so since this first fair value gap formed, you can see that another fair value gap formed around here, right here, though it's quite small. Okay, remember your stop loss is going to be beyond the first candle of the fair value gap. So let me use this black horizontal line to depict where the stop loss will be, somewhere here. Okay, so you are looking to enter around this area. This is a very small fair value gap though, but you can see it was respected. Then your stop loss should be somewhere here. All right, stop loss should be somewhere here. This is the appropriate place to place your stop loss, but if it's too big, you can adjust it based on your risk. What was it called? based on your risk management, you can adjust it a bit, and based on your back testing also. But what do you see playing out? Price came back to that fair value gap. Respected it no matter how small it was, and then pushed in the downwards direction. So if you are waiting here, those that have taken this ideology that I just gave you would have made profits while you are still waiting up there. You can see price just kept pushing in the downwards direction. So the idea is, once liquidity has been taken, any fair value gap offered is a fair value gap you can use to quickly enter the trade and move in the direction of price. Okay, not that you just be waiting at this extreme fair value gap while new fair value gaps were presented, but you did not set your trades from there. You didn't set your traps there. You are waiting for this very first one. Okay, so any fair value gap, so long liquidity has been taken, price can retrace to the fair value gap closest to it and push. Okay, so you need to put that into consideration. Okay, so let's see. Price is pushing downwards. Okay, so price is moving down, trying to see if I can get a good liquidity sweep. Sorry, let me take all of this off. So it doesn't confuse us. Okay, so this example I gave, and price was pushing down. Okay, so I can't find a good sweep. I can't find a good sweep around here. I usually like a sweep whereby, because since I'm on the 15 minutes time frame, I want to see price close beyond the low and then move in the opposite direction. So what I'm seeing here, I don't like it. I wouldn't have traded something like this. You can see price just swept it with a wick and then pushed in the opposite direction. This is not what I'm looking for. Look at the kind of stuff I like. Okay, I want a candle to at least close above it before price displaces, because this type of setup will have a lot of traders trapped in the wrong direction, because breakout traders will think price wants to move up since a candle closed beyond it, so they will take buys. So when the big institution move price in the opposite direction, definitely it's a good signal to sell. Okay, because people have been trapped already, so there is the probability of another trap coming in the downwards direction is low. Okay, but if it's just a wick that goes above and comes below, I don't really like it. If I see a wick on a higher time frame, let's say H1, I can respect it, because a wick on H1 definitely would have candles closing. What's it called? We'll have candles closing in this thing. What's it called now? We'll have candles closing in the 15 minutes or 5 minutes time frame. Candles are going to close beyond it. This would have been a good example. Let me see if a candle closed beyond this. Let me balance it well to be certain, because I need a close below this. So I'm trying to check this low. All right, I'm trying to check this low to see if a candle closed below this low. So I have a little close below it, as you can see. All right, this red candle closed below it, so I think I can use this one. This red candle closed below it, all right, before these bullish candles pushed in the opposite direction. So breakout traders that saw this small red candle close below it could probably take sell trades, and they'll be caught in the wrong direction. Okay, so price pushed up, which will definitely hit their SL. So any fair value gap created along this is a good fair value gap. So let me mark out my fair value gap. So this is my first fair value gap. Price did not come back. Instead, price presented a fresh fair value gap. I'm not going to wait at this first fair value gap. Instead, I'll mark out my new fair value gap. Okay, this is my new fair value gap. I've marked it out. Okay, then it's presented another fair value gap above it again. So I'll still mark that one out again. This is the new another fair value gap that was presented above it. I need a quick entry. By the way, this is for scalping actually. Okay, so you can see what played out. See what played out. So this is the last fair value gap that was created. Price pushed up, then price came back to that fair value gap, tapped into it. All right, your SL will definitely be some you know, some pips below this level, okay, or somewhere around here. All right, then price did what from there? Price pushed up away from that fair value gap. You can see came in, pushed up, so you would have made money if you took a buy trade with this fair value gap. All right, so later I think price came to the second fair value gap below, but you would have gotten out of the trade already. You're not trying to take trades from the second fair value gap or anything like that, no. Okay, so this fair value gap here that I have right here, that's where price is reacting from right now. You can see this big wick, price pushed up from there and it's trying to react from there. So probably this might flip bullish, but this system is not the one I'm teaching you. I'm not trying to tell you to be waiting for this last fair value gap. Definitely price could come to this last fair value gap and still push. Okay, what we need is a quick entry and quick exit. So we just followed, since we know that liquidity has been swept the right way that we like liquidity to be swept, and pushed in the opposite direction. You can see these bullish candles, okay, aggressive bullish candles. We just follow the fair value gaps. We need a quick tap into the nearest fair value gap. We take our trade, get some pips, get out of the market. It's basically for scalping. All right, so if you'd like to join my mentorship program, you want me to teach you forex trading, you know, from scratch, or you already have some experience but you want to learn some of my trading strategies, just reach out to me in the comment section. I'll leave a link in the comment section through which you can reach me. And if you have some general questions you want to ask, you can ask in the comment section. I'll also do my best to answer. All right, so if you're a new viewer, please subscribe to this channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.